So hey, Winston Templet here with the Real Estate Template. I'm here with Jurgen. What's your last name?
Neugaban.
Norgaban. I wasn't going to start that off the hip and say that I could do it because I'll fail. We are here aboard the Celebrity Apex, right?
That's right.
Class X ship. Really cool balcony in the room. This window lets all the way down. There's a shade right here that comes down, keeps it dark at night. Really a cool thing. We are here at the Jason Hartman Empowered Investor Conference. So we're sitting here on this ship, beautiful ship, for some great education. Today was our day number one of spending all day in a classroom. We just got out. We both got us a glass of wine, so we're going to enjoy us a glass of wine as we're sitting here doing this video. And we're just going to talk about, we were talking yesterday, and Jurgen said, I got some questions I want to ask you. And I said, well, if we got questions we want to talk about, why don't we just do that face-to-face in front of a camera, and we'll turn it into some footage, because typically I find whenever we're talking to people, everybody's got the same questions, but people don't want to ask the questions a lot of times. So it's just something I think that helps everybody.
Right.
So welcome.
Thank you.
So tell us a little bit about yourself.
Okay. So I currently work overseas. I've been overseas in the Middle East for over a dozen years. It's been a good experience. If you're open to the opportunities, and America doesn't quite offer those opportunities in this day and age, it sometimes pays dividends to take that risk and go overseas and experience new cultures and reap some of the benefits of not working in the U.S. and having to pay U.S. taxes.
So do you pay taxes on what you make?
Well, a little bit. My effective tax rate is about 10-11%, but most of my income, it's W-2 income, but most of the income is tax protected. There's also something called the Foreign Earned Income Tax Exclusion, which protects the first 110,000 of income. And I don't pay Social Security, I don't pay Medicare. And as long as you have, I think it's 40 quarters paid into the system, you can qualify for the maximum Social Security benefits if that's paid out when I retire in a few years. So
there's a mandatory age restriction that you got to quit, right? You got to leave that at a particular age.
Yeah. So for expats where I'm at, it's 60, unless there's an extension that's negotiated. But in my case, I won't be looking for that extension.
And you're an accountant.
Yeah, background CPA, CRMA, that's Certified Risk Management Assurance. It's a subspecialty under the Institute of Internal Auditors. Project Management Professional, and MBA from University of Miami.
That is cool. That is a whole podcast or YouTube video to talk about all in of itself. But we will save that for another time. But it is definitely interesting to see that. So we were talking yesterday, and you were saying that you had a pension, but you really don't know that you're going to trust your pension for anything.
Yeah.
And you're now into real estate, and you're trying to get deeper into real estate. You want your real estate income. You had a goal of, what was your number?
200,000.
200,000 a year. So he's got a goal of $200,000 a year that he wants to get in passive income through real estate before he retires, so that, if your pension works, it works. That's awesome. But if your pension fails you, like everybody's talking about that they're going to, so if the pension fails you, you still got game B, a plan B in there, that you got another avenue that will get you to that position. And how many rentals do you have right now?
I have 5 rentals in 2 states.
So 5 rentals in 2 states. Leveraged, not leveraged?
Not leveraged.
So I'll pay cash. Okay.
Yeah. So and I'm looking to expand that somewhere between 5 and 10 in the next few years or so, depending on what happens to the macroeconomic situation, and if I can find viable markets. I've been spending a lot of time looking around the last few years to find those opportunities, but they're becoming harder. For example, I went out to Vegas in, December or so, looked around there because my mother was interested in maybe investing out there, maybe moving out there. Recently, a couple weeks ago, we went up to Northwest Indiana to check out properties, property managers, and so on. We also spent some time in Tennessee. We talked about that. The Spring Hill area and Columbia area. Columbia is developing very quickly. And then there's other opportunities that are always available recently in Florida and Alabama. And I have some properties in Alabama But the Southeast, at least in my opinion, hasn't been the best for tenant demographics and property management. Even the builders are a little bit questionable. But another state that I do business in, Arkansas, has been very good for me. It started out a little rough and slow because there was some overdevelopment and a lot of competition in the area. But I think it will turn out to be one of my more solid investments and decisions. And that's kind of how I want to base my future decisions going forward. And one thing I learned when I purchased those 5 properties, I purchased them sight unseen. I went through various parties that were experts in finding these properties and property managers and everything that's supporting that structure. But there's no substitute for putting eyes on the properties and speaking with the property managers directly, speaking with the builders and doing your own due diligence on the spot. It's difficult to do that, especially if you're working overseas or you don't have the time to, fly to those locations. So these last couple of years or so, I've just been basically using my vacation time to do this due diligence and other things, such as the Empowered Investor Conference, and I'm going to a couple of other events later this year to improve my game and take it to another level, essentially.
So did you get any education at all prior to starting this right here? Or you just started from scratch?
Well, I was an accidental investor when I ended up taking a position with this company in the Middle East. I had a house in Seattle, so I ended up turning that house into a rental property because I didn't want to sell it at that time. And I thought, let's try it, let's get some cash flow out of it, and then decide where we are in the market cycle, and then try to time the market cycle. When I bought near a high, which was May 2006, and things fell apart right around 2007 or so. So I bought near a high, and what I learned is the cyclical markets, like on the West Coast and the East Coast, they go up fast like a roller coaster, and they go down fast. So in the 4 years I owned that property, the property went up about 50%. And
so I just want to check and make sure everything was working like it was supposed to.
Yeah, sure.
So 50% in how long?
In about 3 to 4 years, it jumped 50%.
What years was that?
So 2006, 7, 8, I guess that was 3 years. And then after that point, it dropped precipitously. And within a year and a half, I lost 45% of my equity. So it was below the point that I purchased it. And it took over 10 years just to break even to that point. And then it doubled within about 3 years. And that's when I decided to sell it, because I didn't want to be involved in the cyclical markets like that. The rent to values were really low. They're about 0.3%.
So Seattle's a cyclical market?
Yeah.
So if you don't know what it is, there's a linear market which pretty much just maybe goes up slowly, but it continues to go up, and it always goes up, well, mostly always goes up, and it doesn't jump all over. So a cyclical market is kind of, if you look like a sine graph, it's up and down and up and down and up and down. You may go up, 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 and then down, and it's kind of cyclical.
Yeah.
Cyclical, right?
Cyclical. Yeah.
So then you got a hybrid market, which is kind of a little mixture between both of those. A lot of times it may be cyclical, and then it'll just steadily go up at a very even pace at another time. So it's back and forth. So I like a linear market more than I like anything else, and that's where I prefer to be, because it's boring, but it's consistent.
Exactly.
And I don't like emotions in my financing when I'm trying to invest.
Right, exactly.
So, okay.
So I looked a lot into Tennessee. I was very pro-Tennessee about 4 or 5 years ago when I went through there. But at that time, it was just too popular, a bit saturated with investors and also regular people buying residences there. So it was interesting and encouraging a little bit to visit that area again and see that there are still some opportunities, but you're not looking at the big cities anymore like Memphis or Nashville. You're looking at tier 2, tier 3 cities, or what I consider, that used to be a farm and now it's a subdivision. So
I like bedroom communities. So I like a community that doesn't have a lot going on in it. It's not a happening area, but it's where the people that work in Nashville go to sleep, because they really, maybe they don't want to live in a big city with the big noise and all the hustle and bustle. They want to live out where it's a little bit calmer, or maybe they just can't afford to live in the city, so they go out, 15, 20 miles outside of town, and they stay there. And now what I'm starting to notice in our city where we are now, it's getting so expensive there that people are now going over an hour outside of Nashville just to try and find a place to stay so that they can afford it, because it's the prices are going up.
Yeah.
And I don't think they're going to come down at all. I think they're going to just keep on rising.
Yeah, and that's something I struggle with too. What's the old saying? Drive until you can afford it.
Mm-hmm. Right. Yeah. And I think if you don't buy right now, it's going to keep going. And that's one thing we learned in class today that they were talking about is, there's so many people right now sitting on that fence waiting for the market to crash so they can go in and buy real estate. But when you're 6 million, somewhere between 4 and 6 million houses short in our country, it's probably not going to happen. Yeah. And if you're missing, somewhere between 5 and 10% appreciation wherever you're living right now, and you're missing all that appreciation, how long does it take you, if you do that and you're good for 3 years and it made a 5% drop or a 10% drop, so what? If you're renting a property and if property cash flows where you are, if the market does take a drop, typically your cash flow doesn't change, your rent doesn't change, your rents go up. They go up in almost any market. Yeah. So your rents are still going to go up. It's still going to cash flow. You might not feel like the property is worth what you want it to be worth, but your money hasn't changed. Right. And you're looking more at cash flow than anything else in another 5 years. Right. You can take a little bit of a beating right now, but you can't do that 5 years from now. Right. So, what about, you said you had a couple of properties you wanted to sell. It's kind of cool when we was talking to Scott Sanders, and he said that you could take all the money, 1031 it, and leverage it across 5 different properties with a 20-25% down payment on each property, spend all that money on those properties. Now you got 5 properties appreciating instead of 1 property appreciating. Now you're probably going to come out with about the same cash flow across all 5 of them as you was getting with the 1, but now you got, when you do rent increases, that rent increases times 5. You got depreciation is times 5, and it's a good concept. I never knew that we could do it that way, so that was kind of cool to learn that.
So one interesting thing that I figured out with the Seattle property is when you do the 1031, because the values are so much higher on the coasts, the East Coast and the West Coast, you can do that 1031. I was making 0.3% on that Seattle property. I couldn't charge enough rent because of the price of the property. So
your cap rate basically, or your cash on what you was getting on your cash, was 3%.
0.3%. Remember the 1% rent to value?
So it was
0.3, a third of that.
Oh my goodness.
Yeah, really low.
What was your appreciation rate?
Well, the appreciation, remember, it cuts both ways, right? So 45% down and more than 100% up ultimately. But so you can't really count on it, and it becomes more of a discussion about the macroeconomic cycles. Who predicted 2008? There's lots of people that come out and say, I predicted 2008, here's my podcast, here's my video where I said something is going to happen. But the truth is, I was aware of what was going on back then. I monitored these things closely. I did not see it coming, and I don't know anybody around me who saw it coming.
So many people say that. I think Robert Kiyosaki was fairly accurate on that right there, because he was claiming it to the month that it was going to happen. He wasn't just saying it. He was saying it's going to happen this year, and it's going to happen before this month, and he was, right on the money. But you hear like Peter Schiff. Peter Schiff will come in out there and he said, well, we're going to have a market crash. Well, you can say that for 6 years and we don't have a market crash, and in year number 7 we have a market crash. Okay, was you right? I don't know. You're going to be right eventually, right? Because the market's going to crash eventually. So one day you will be right. But the question is, all those people that, and we were talking about gold earlier today. Yeah. Everybody's been saying invest gold, invest gold, invest gold, invest gold. But gold gives you a small amount of appreciation, but gold does not give you depreciation. Right. Gold does not give you cash flow. Gold does not give you principal reduction if you got a note on it. Gold does not give you all the other stuff. So all these people that haven't been investing in real estate for the last 8 years, because there's a lot of gurus out there that say, hey, don't invest in real estate, it's going to crash. And I have no indicators that say it's going to crash, but how much money have they lost in not being able to invest?
So that's an interesting point, because I subscribe to a number of different reseller mechanisms, like, Jason's network, for example. There's Rent to Retirement, there's Narado Capital, There's about a half a dozen that I follow, and what I'm starting to see within the last 3-4 months is a softening with the prices. And the way the softening works that I've noticed is the price is still up here that they're asking, but for example, I was at Lennar, and in Tennessee they said, well, the price
He's
is
talking
here.
about Lennar Builders,
right? Which is, my understanding, the second largest builder in the United States,
okay.
right? So they have a good reputation from that perspective. But what I saw was they're starting to play games with we'll offer you 5.5% interest when the current rate is 7.25% or something like that, depending on your credit. But then they're offering buy downs, right? So part of the buy down buys down that interest rate. Part of the buy down goes towards your closing cost. Part of the buy down goes to special incentives, and they kind of figure this out like voodoo magic in the background, because when I asked the question twice, what exactly are you doing with the buy downs and how does that affect the overall price that I pay? They couldn't really go into any specific details and said essentially, well, it's deal specific. Tell us which house you're interested in.
So if you are watching this video or listening to this video, when you go to a big builder or any builder really, and they are offering you a buy down rate, the price they're paying for that buy down rate for the mortgage, then they put it on top of your price that you're paying for it. You're paying for it in the end. They act like they're giving it to you. So they're not giving it up front because they're going to adjust the price accordingly as you come in with that. And that's where, I'm not saying we get screwed, but you get screwed because you're thinking you're getting something that you're not getting. You're actually paying for something that you didn't realize that you was paying for. And then, where's the rate going to be 3 years from now?
Yeah, and it's a bit of smoke and mirrors because they're trying to create the impression that the market is still at the level that they create the pricing when it's really not.
No.
So the next buyer that you come in behind me and they say, oh, well, you're getting paid X thousand for this house, so therefore it's logical you pay the same or a little bit more because housing is going up, right? Today I just saw another option for 20% discount on financing if you do certain things, and I won't mention who that was through, but I'm seeing more and more of these, not daily, maybe weekly or so, and I listen to a lot of these podcasts and I watch the videos around this and I kind of compare them against each other, and a lot of these vendors do business in the same kinds of locations. It's the heartland areas, right? It's the linear markets, it's the southeast, and you see the same kind of properties that are being offered by these different companies, and you see the difference in how they structure the offering between them, so you can tell who is more pressed to move these properties and who is doing better at moving these properties through inventory and getting these sales. But to your point earlier, prices are only going up. My gut tells me that prices are softening and starting to
So Nashville had a 9% increase in appreciation last year, 9%. I think interest rates dictate some of that softening. At 8%, I'm sorry, most people just can't afford to buy the house that they want anymore, and they would rather rent a house that they want than buy a house that they really don't want. So they're not buying because of that. So what's softening, in my opinion, on that is I want to sell a house, I need extra cash flow for something. And because I need to sell it, I'm willing to take a little bit of a loss to sell it and get rid of it. But it's not really that the house is worth less money. It's just that people are willing to take less money for it because they want to sell it.
Yeah.
But the appraised value of it is typically still going up every single year.
So one interesting statistic I've heard mentioned a couple times in two different sources, and these are reputable resources, sources that I follow on a regular basis that do pretty deep analysis of the macroeconomic picture, interest rates, the home affordability index, and Jason kind of points this out too. Back in 1970 or so, when this was benchmarked, I think it was 1970, it took about 4 years' salary to purchase a house. Do you want to guess what it is today?
I would put it probably closer to 6 or 7 years.
Yeah, it's over 7 now.
Yeah.
So the affordability index has gone a bit, it's almost doubled, right?
So we keep talking about Jason Hartman. You can go to jasonhartman.com. He does a podcast and he does YouTube videos, and they're on creating wealth. You would really enjoy him. He does a Hartman Index, the Jason Hartman or the Hartman Comparison Index that he does, and he compares all sorts of crazy stuff: eggs, orange juice, rice, grain. He even compares prostitution.
Commodities.
You know, if you were selling your body 30 years ago, how many times would you sell your body to buy a house? Yeah. And he does that in everything, and he says, you know, across the board, it's relative. You know, everything is about the same. The dollar's depreciating, the cost of everything else, consumables are all going up, and as it goes up, it's still basically fairly close to the same as it was in the 70s. There's a little bit of difference, but it's not a lot. And it moves a little bit here, and I think orange juice is the biggest comparison. That orange juice is overperforming everything else on inflation. Wow. But so I didn't mean to get on a tangent, but just so they know what we're talking about with Jason's stuff, that, you know, we'll give him a little pitch out there, because I think, you know, I love his content, and I agree with it. I attend a lot of his events and stuff, because we just on the same page on a lot of stuff.
So I don't know where this will head, but, you know, eventually I think what we'll see is these companies, these intermediaries, will continue to come up with creative financing solutions. You know, we're seeing cars now being financed over 7 years?
Yeah.
$1,000 a month payments on a car.
You know, I got a neighborhood I bought, 4% interest for 40 years.
Wow.
I got a 40-year note on that neighborhood.
That's awesome.
That's crazy. I'll be dead in 25. You know, I'm not going to be here. Yeah. But 40 years. So we got 41 houses, and my note on 41 houses, $7,500 a month.
Wow. Okay.
That's what it is. It's just crazy.
So one of the things I spend a lot of my time on is trying to divine the future, you know, from, again, a macroeconomic perspective. What's America doing? And I look at trends. Are things getting better daily, weekly, monthly? Or are things getting worse? You know, how do I look at that?
Can I guess? My thought is they're getting worse. What's yours?
Well, yes, but then, you know, the counter to that is the people who are moving real estate keep saying, well, buy real estate. It's a great investment. If this is true, that, you know, what everybody is seeing is things are getting worse, there's a point in that cycle where prices correct. Mm-hmm. So how close are we to that point? And that's
but when has prices ever corrected on a negative scale and then just not turned around over, it might take 10 years, but over a 10-year period of time, and then be up above where it was and continuing to climb at a rapid rate?
Yeah. So I'll just give you a quick, my own thesis on this. I think, you know, there's people like Doug Casey who talk about the Greater Depression, not the Great Depression, but the Greater Depression. Robert Kiyosaki is famous for saying we're headed into much worse than that. Yeah. You know, World War III and all sorts of other things, shortages. He talks about his 5Gs all the time. This is a guy who's worth, I don't know, $200 million. He doesn't disclose his net worth.
Who?
Robert.
I would say he's well over $1 billion.
Okay.
I mean, Ken said I think Ken said they're now at about $4 billion almost.
No, 1.8. I recently heard.
I thought he said the other day. I thought I was listening to something because he was at $2 billion when I was part of the collective group. But I thought the other day he said that they were up tapping on about $4 billion right now.
That's amazing. I heard 10,000 doors.
Yeah.
At some point, you know, 4,000 a few years before.
Yeah. And that wasn't 4,000 was less than 5 years ago.
Yeah.
4 or 5 years ago he was at that.
Exactly. Yeah. So Robert, and I follow this guy, you know, fairly religiously. I listen to his podcasts. I read some of his books, right? Rich Dad, Poor Dad, Wealth Strategies, the ABCs of Real Estate Investing. Tom Wheelwright, Ken McElroy, all these books. And
how do you like Tom Wheelwright's book?
It's okay. I mean, it's a little dry, but I find nuggets in there that are very.
I learned a lot reading his book, and I had come into about $6 million at that particular point in time that I needed to move, and I moved that $6 million into one of these into an apartment complex that I bought, and you know, I went and moved it into an opportunity zone where I didn't have to pay taxes on it. So now I'm coming up a few months from now, or a few years from now, that I got to pay all those taxes. But we were just talking earlier today that I'm probably just going to do a cost segregation, and I got almost, you know, close to $20 million worth of property that I can cost seg on. So I just need to go out and do a cost segregation on it, and that will eat up all them taxes that I'm going to have to pay pretty much. Nice. So I'm looking, you know, you're always looking at different opportunities to not pay taxes if we can get away with it.
So where I was going with this with Robert was he's one of the people that says he spotted 2008.
Yeah.
Right. And I can't tell you how many times he said this, but he said, I see it happening again. I see it happening even more than 2008, and I'm salivating. Those are his terms.
And he's been saying that since 2015.
Yep. It's been a while. But, you ask Ken, or I don't ask Ken, but Ken comments on it too and says, I kind of see the same thing coming, and we're ready for it. The last time we made more money in 2008 by having cash ready, having credit ready, understanding our markets, knowing what our pricing was and our numbers.
But they're all saying they don't see 2008. 2008 was a real estate crash, and that was because of derivatives and different things like that the banking system was collapsing because of how they were doing business. Today they're saying that they don't see a collapse in the real estate market, they see a collapse more in our economy.
Yeah.
And it might affect the real estate market a little bit, and then again it might not affect the real estate market at all. Because housing, we have a shortage of housing so much right now. People are still in need of housing, and what's the government going to do when that happens? They're going to print more money. What's that going to do? Cause more inflation. Our real estate is going to skyrocket again like it did in 2021.
Yeah.
And it's a vicious cycle for the government to make the rich richer.
Yeah, the rich like Robert.
and eliminate the poor.
Yeah. There is more bifurcation going on daily, but we see this throughout history over time. The people that have a little bit of influence, it starts out with the merchants. The merchants buy favors from the politicians. The politicians bend the laws to favor the merchants and the politicians. Then you start to get a fusion between the merchants and government, which is fascism, and that generally takes over, and those people start to rise like cream in the restaurant.
That's what's coming too.
Yeah.
That's coming.
But this always seems, historically, to operate in a cycle, right? It's a boom cycle and a bust cycle. So the question I ask myself is, where are we in that boom bust cycle? The people that say buy, real estate's only going up, well, fine, but are we still in that increasing part of the cycle where it's buy, boom, right? Or are we tipping over the edge, heading into the bust part of the cycle?
So I don't think we're tipping over the edge right now. But I am not a proponent of going out there and telling anybody to go leverage a bunch of money that they can't afford to leverage. If you can't afford to pretty much make that note, if you had to make that note, don't do it. Now, if you're buying, you said you're going to buy 10 houses in the next
over whatever period, over whatever period of time.
5 years, 6 years. So you can say they're talking about the rich like Robert Kiyosaki. If you got 15 houses and inflation goes up, you're making a ton of freaking money in appreciation over year until they fix that inflation problem, right?
Yep.
So you are part of the rich. I mean, that's part of it.
So my concern is, remember I said I lost 45% of my equity in 2010 or so, 11, when it kind of started heading down. It took more than 10 years before break even, right? I'm at a point in my life.
But you was in a cyclical market too.
Yes.
So that's Nashville. And I think I might have told you this. I might have been talking to somebody else. When 2008 happened, I didn't even understand. I kept listening to the radio, watching the TV, and I'm like, I don't even understand what these people are talking about. My real estate is great, and I was buying and buying and buying. I was buying at a discount, and I never felt it.
Yeah. Well, the worry that I have, and if you go back and I study a lot of history to try to figure out what's happening in the future, and I listen to a lot of people who analyze this, and there's a ton of great work out there. But the Great Depression, when that happened, that took about 24 years, 25 years before things righted. And one thing, as an accountant, when I look at things like the value of assets, or I should say the price of assets and the price of debt, and we have conversations about record debt, global record debt, particularly the Western nations, China, Russia, everybody, up to their eyeballs in debt, right? So the question is about how sustainable is that debt? How long can they continue to create that confidence to continue to roll over that debt and manage the interest rates around that? But anyway, if
I think they're going to bring it all into a one world currency eventually.
Eventually, yeah, that's the great reset, right?
That's where it's heading, I think.
Yeah, global control and all that. But I don't have 25 years to live through the next, if there is a greater depression. I'm more worried about my downside than I am my upside at this point.
So I don't have an answer for this, okay? So I'm shooting from the hip asking this question. What happened to real estate investors, people that were sitting on real estate during the Great Depression of the 30s?
All asset values collapsed. Stocks, bonds, real estate, even the value of cash collapsed. So the only thing that was good for a short period of time was cash. And back then we were on a gold standard. Mm-hmm. And shortly after that, 1933, the government took all the gold under penalty of, penalty, 50,000, 10 years, right, for instance. So this time the American public doesn't have gold. They have paper.
No.
So this
Which
time,
is definitely useless.
Yeah. Well, so not to get too detoured from this, but I read this book that's out there, the free PDF that I think I mentioned to you, the Great Taking by David Webb. It literally changed my goals. I have my goals in my office, where I look at them 5 days a week and say, all right, when do I need to do that? How am I doing on that? And so on. It literally changed my goals and reframed my thinking process to, if I don't own hard assets and hard assets that produce income, hard assets that have a predictable downside, remember the Seattle analog, losing half my equity versus other states where it's linear. You might lose maybe 30% of your equity. How long does it take you to get 30? How long cash flow wise do you have to own that one property, for example, to recover 30% of lost capital, right? Plus your operating expenses and so on. So this is the kind of math I look at, but the short version of the Great Taking that really opened my eyes was anything paper won't be yours. So if it's cash, you're considered an unsecured depositor. And we already saw that in Greece and Cyprus, right? They took the Russian money and they said, here's your 100-year bond at 2%. Those people will never see their money again, right? At 2%, that money is inflated away.
Yeah, it goes away immediately.
Right. So that's kind of where I think we're headed. And then the second thing is stocks and bonds, you're considered an entitlement holder. So you don't actually own those certificates. You own them in a sense where you can buy and sell them. But at the time where the financial institutions like BlackRock and Wells Fargo and JP Morgan, they need to recapitalize their balance sheets like in 2008 where there was a bailout. This will be a bail-in. There's no gold to steal from you this time. They're just going to take your paper assets because S&P 500, everybody's rich, right? Yep. Until they're not. So that got me thinking, and that's why partly why I'm here is to up my game on buying hard assets that maintain value, that maintain purchasing power in any situation that we might face in the future. So even if it's real estate, so looking at these two states that I was in, I measure my downside. What is my maximum loss in this? How long will it take to recover that? How will it impact my overall cash flow in 10 years, 20 years? And does that scenario work for me where I can come back to having $200,000 of purchasing power today, which 10 years from now it'll be 150 or whatever, and then 10 years from then it'll be less than 100 or so if we keep inflating the currency like this. So these are some of the tricky decisions I'm trying to figure out, and people like yourself have a way of dealing with that, but people like myself who work for W-2 and are part-time investors looking for passive income through the traditional real estate, single-family rental or small multi-apartment building, it's a more difficult proposition, I think.
Yeah. So we got some questions we want to talk about. So you're saying he wasn't talking about the loss of capital, he's talking about the preservation of capital.
Well, no, what I was saying is he was looking more at the cash flow. He was saying, and I hear this argument all the time, so what if you lose 50,000 on a 100,000 property or 30,000 on a linear market property? So what? Is it still cash flowing? Mm-hmm. Of course, yeah, it'll still cash flow, but it won't cash flow at 100 cents on the dollar anymore. Yeah. It'll cash flow at 80 cents or maybe 60 cents on the dollar, right?
And that's where your time in the market really, you start leveraging that time in the market.
Right.
I got a couple of properties I just sold. I sold a house a year or so ago that I paid $18,000 for it in 2008. And I sold it for $267. Wow. In that amount of time. I mean, I just a month ago sold a piece of property I paid $114,000 for, not $100,000 for it 10 years ago, and I sold it for $750.
That's amazing.
In 10 years, and I got some properties that have huge returns like that, and it's that time that you're in that market. It's not a get rich quick thing. It's a get rich over, very very much linear, going up slowly but consistently, and then you get something exciting that happens, and something happens in that particular area, and everything maybe takes a 20% increase at it in 1 year, which is pretty cool. So we got questions we're going to talk about. So let's just, and we have not talked about these questions, so neither one of us know what the questions are. So, or I guess not neither one of us, you know what the questions are because you wrote them. So one of us knows what the questions are.
So I mentioned that I'm going to be attending several events this year, and I want to kind of use these opportunities to ask smart people, successful people, what they think about the macro picture and what they're doing to position themselves for success, and what they're worried about and how they're protecting their downside, right? The same things that I look at. And also another issue we talked about is what's your exit, right? So, you've done all this work.
So Jurgen's first question to me yesterday was, what is your exit plan? And I told him I don't have an exit plan. And I don't have an exit plan because my intention is I will probably hold my rental properties till I die. I probably won't sell them. I have kids that will take them and run with it and things like that. And, we make enough money, we can do whatever we want to do now, so it's not a big deal. So if I had to come up with an exit plan, to take and sell everything doesn't make sense to me. Now you're in cash, and cash is trash. So I don't really want to be in cash. But I was talking to Lori yesterday, and Lori's got 5 or 6 houses that she owns, and she's 65, I think, and she's ready to retire. But she said, I don't have the cash to retire. I said, you do have the cash to retire. She said, I don't. I said, if you sell one house, you retire right now and you take your Social Security, and you take your pension, whatever, she's got a small pension too, you take that, and then from there, if you can't live on that, sell one of your houses and say, okay, I'm going to sell that house and I'm going to supplement it. I think the houses are worth $300,000 plus. Sell a house, and maybe you take $50,000 a year from those proceeds and you throw that on top of your income, and you enjoy that off of what you're already getting. That will get you through it, and she said it would. So at $300,000, that's 6 years it does it. Now the other houses are appreciating, somewhere between 3 and 5% every year. Yeah. So they're going up in value at the same time. And then 6 years down the road, she's 71. Okay, sell another house and do the same thing. Mm-hmm. And you'll be long dead before you run out of money and get to that 6th house, because at the same point in time, she's still getting cash flow from them, and she's still getting a lot of other stuff. So for me, if I was in that scenario, that's what I would do. I would just liquidate one house at a time, and then I would let the other houses appreciate in value. I would still collect my cash flow on it, and then whenever I ran out of money, I was getting close to running out of money, I would sell another house and say, okay, let's go for the next 5 years on this, and then we'll go from there. What do you think about that?
That's a good idea, yeah. There's 2 other ideas to add to that potentially. What Jason just did with the seller financing. Mm-hmm. So
with a lease option, right?
Right. So instead of getting paid $100,000 today, you get paid $20,000 over 5 years, and that $20,000 doesn't hopefully increase your tax bracket to the next step up, right? Yeah. So you can take the full 100 over 5 years and not really feel a big tax impact on that, or an incremental tax impact. Another thing I looked into was buying whole life insurance policies, universal life, right? But it's papered. I don't want to buy paper.
They just universal life is so expensive. And I've bought universal life a couple of times, and I get so frustrated with all the freaking fees that you pay on it. And I've gotten out of it both times, and I said, I'm done. I'm never doing it again. Yeah. And so when my life insurance runs out, it runs out.
So one interesting thing that I figured out going through these mental exercises is, most people don't think about their exit. Like we talked about, when you get into a trade, an options trade or a stock trade, you don't think necessarily only about your entry, but also your exit. At what point and when, right? So people don't generally do that.
So I'm not a saver of cash.
Okay.
I rarely ever have cash. And I think we talked that I buy, I invest everything I make. I'll buy property with it. I will build houses with it. My money is always working for me. I view that as little soldiers. Each little dollar is a soldier, and I send that soldier out to work for me and fight that war and bring back some captives, and I make that money make me money. And in everything that we do, my exit strategy is if I get in any trouble financially. Let's say I get in over my head on something,
or get sued,
and that can happen. That's doable. Yeah. So I get in over my head with something, and I can't make ends meet. Then the first thing I got to do is I got to sell a property. And I got, the majority of my portfolio I don't owe any money on. So I can easily liquidate. I could do a 30-day auction and sell properties off. And nowadays you're still getting retail basically if you do that. But let's say I only got 60%. Okay. 60% of what it's worth today is probably twice what I paid for it when I bought it on most cases. So I'm still okay. But I always view it like that if I got to, I can always sell something. I can always sell something. And not my goal that I want to do, but I wouldn't sink.
Yeah.
So
yeah, it's something I have to spend a little bit more time on, and not only maybe it's just not one strategy, maybe it's 2 or 3 strategies, but part of that one exercise I went through is plotted the next 30 years of my life and what that cash flow would look like, the sources of cash flow, the expenses, and how I would draw down these hard assets in a way that I could, to your point, live off of and monetize in the future without losing purchasing power. And that's the tough part because real estate does kind of keep up with inflation.
And one thing I've learned, every one of us have a different risk tolerance too. I know some people that, the smallest amount of risk, they are a nervous wreck all the time. So they can't do anything that throws them in that level because they can't function. They'll keep their day job their whole life because they can't fathom the fact of they will go and gamble at a casino, but they wouldn't buy a piece of real estate because it's just too risky.
Yeah.
I'm like, you're losing every freaking thing you do at the casino, but you won't risk a little bit on a piece of property. But I guess that's what makes us kind of cool as people is we all a little bit different.
Yeah, that's true.
Question number 2.
Okay, question number 2. What's your assessment of the global economy, debt, and when or if this all gets sorted out? I'm asking because this is probably my primary concern.
So my thought is it will never get sorted out. I told you my opinion was eventually we will go to a one world currency. I think we're going to see that, and I think we might see that in our lifetimes probably. Maybe not. I think so, but too. I think it could happen in our lifetime. I think we're on a great path for that right now. I think there's a lot of countries that want it, and I think right now our leadership in our country wants it. And once the leadership wants it, they just start trying to pull the strings to make it happen. And I think we're seeing some of that. We've seen it since Barack Obama was in office. We saw him wanting that. He made mention of that when he first got into office, that he would love to see a one world currency. So I think that's coming. But I think as we look across, I think the United States is in financial trouble, but of all the other countries, we're probably in the best financial position as almost every other country. There's probably some out there that are better. I think Europe is struggling hard right now, and I think that China is struggling hard, and we got population issues almost worldwide, and they alluded during class today, about the what did Jason call the undocumented workers?
Oh,
non-paper workers or whatever. They got no papers.
No paper workers.
So the no paper workers. If it wasn't for the people coming across our border, we're in a huge decline in population also. But what most people don't understand, in my opinion, I think all of the people coming across the borders, even though they're coming illegally, they are replenishing the people for the people in our country having no kids or having what is it? The average right now is only like 1 point something, real small, not even 1.5. So, and in order to replace what you got to replace like 2.3 or 2.5 or something like that to replace the population, because you have people that get killed in war, people that get killed in car wrecks and stuff like that. So we got to replace all those people, and it's just not happening. So the undocumented workers that are coming across the border, they are adding to this population, and they're keeping our country where we got enough people to do the workforce. Where there's really, I don't think, any other country in the world that's doing that. You know, well, Africa is the only country out there that's self-supporting itself and sustaining itself with a higher population. They're growing in population as a country, not from outside people coming to their country. Everybody else, I mean, Japan and China are dying. I mean, the whole countries are dying because their work population is in their late 60s now, the majority of them. So as they die out, robotics have to come in and different things have to come in to replace these people because they do not have anybody. I mean, nobody wants to get married. They just want a dog, and a dog is their kid. They take it everywhere they go, and that's their life. So it's a scary thought from that perspective. I think, you know, in my opinion, I know a lot of people say they don't worry about the BRICS nations, and you got some people that do worry about the BRICS nation. I think the BRICS nation, I'm not worried about them, but I'm not also oblivious to that they're there and that they do have a great goal of taking over as the world currency. And I think give them a little bit of time, and I think they very well can succeed. And if I was a betting man, I would probably go to that they will succeed. Because, I mean, the amount of countries that are applying to be part of that is just staggering. And they're applying for that because they don't trust the United States no more.
Right.
And that is a bad place for us to be as a country. And everybody says, "Oh, we're the strongest country out there." We are, but we are losing our steam really quick.
Yeah.
And I think that Americans are, I don't want to say they're too ignorant to recognize that, but most are too ignorant to recognize that.
Or in denial.
You know, we're fine. Nobody's going to come take us, and nobody's going to replace the thing. They're already replacing the petrodollar now.
Yeah.
I mean, Russia's, it's the rubles they're trading in, right?
Yep.
So they're already trading oil in the rubles, which is against the whatever treaty that is.
Yeah.
So it's against that, and they're doing it more and more. Yeah. So they're not abiding by what they're supposed to abide by, and more people are jumping on that bandwagon, deaf to America.
Yeah, exactly.
So does that answer your question?
Yes, it does.
So are we on the same page or different pages?
Same page. Who is it? Doug Casey and somebody else are.
So we don't typically drink wine during our interviews, but we are on a cruise, enjoying the cruise, and we just enjoying a glass of wine as we're talking.
Doug Casey and others are fond of saying that one of the trends that we're going to see in the next few years is mass migrations. So, you know, one example is what's happening with the southern border in America. It's not by accident, right? And it's not advertised why this is happening or how this is allowed to happen, and there's financing behind this, and there's a lot of global characters involved in this. But I've been to Europe several times over the last few years, and I'm seeing the same thing. In fact, when I was in Germany...
Mass migration to Europe?
Yes. So, for example...
Well, Greece was falling apart, right?
Yeah.
I mean, they didn't have any population replacing anybody.
Yep. So Europe is aging too. Germany, for example, is now allowing for citizenships for Turks. It used to be that they were guest workers. They had to leave the country and so on. Now they're letting them settle. What does that do for the engine, the industrial engine of Europe, you know, to change the demographic of that country from an aging population that's used to doing certain things a certain way to bringing people from Southern Europe? That has to have an impact, right? Same thing with America.
But the cool thing is, I mean, they got to think outside the box. And I think what's happening in America, maybe they are thinking outside the box, but they're just not going to tell the people what they're thinking.
Yeah, so it's...
And that could be it.
Deceptive, I think.
I don't know if it is or isn't, but...
So, all right. May I ask a second question, or third?
Let's do it.
So how do you preserve your equity in real estate without being harvested by the banking system in a scenario like the Great Taking? And if I can just preface that, remember I said cash, you're an unsecured depositor. Equity, you're an entitlement holder. These are the terms that are used in the book. These are actual legal terms that the banking system uses. But it's not limited to paper. It's also limited to encumbered real estate. So if you have real estate that has a note behind it, that can be used as a vehicle to remove the real estate from your ownership in this kind of a scenario. So you said you have some debt.
Yeah.
You're largely liquid. How are you looking to protect yourself, or you have so much cushion you're not even worried about taking a hit?
I'm not worried about taking a hit right now. That isn't because I could sell just most of the raw land that I own and pay off almost 100% of my debt with just the raw land, and that would never touch my cash flow. That would never touch any of my cash flow. That would only be selling land. And so I feel like I'm fairly good there. And I'm very cautious to not over leverage. I'm not a huge risk taker in that. And I'm always putting more irons in the fire, which some people say, well, that makes it worse, because the more irons you got in the fire, the more chance you got to collapse. But most of the new irons I put in the fire, nope. All of the new irons I put in the fire have all been cash deals. So there's nothing that I've bought in the last 14, 15 months that I've borrowed money against. Everything I've bought in that amount of time I've paid cash for. Even, I told you we've put at least $2 million worth of cash into rehabbing these houses we just bought. We bought, 57 houses in one neighborhood, 41 in another, and I've put a couple of $1 million into rehabbing those properties, and that's been through our cash flow for the most part that we did it, and then I got a HELOC on an office building that I have, so we'll pull money out of that HELOC. But my whole intention with all of that, as far as that goes, because that neighborhood neither one of the two neighborhoods we have a ton of debt on. So my thing is I will eventually pull all of the money back out, pay off my HELOC, and just have that debt sit on that neighborhood. And my goal with one of those neighborhoods in the next 3 years will probably be to sell one of the neighborhoods, and then maybe a couple of years after that sell the second neighborhood. And then at that point I would do what Scott was talking about, and I would probably take that money and leverage it across several different properties, but maybe not leverage it but 50%. Not do a huge leverage on it, but just keep it where it's manageable. And then if we do take a hit, we got to take a huge hit to put me in a bad position. And I don't know that we're going to take a 50% hit.
Okay. Yeah. So Tennessee, from my memory, is a linear market. So my estimates from what I saw back in 2008 when I did the math was about a 30% correction. You didn't see anything, but when I looked at Memphis, I saw the prices before and after.
So Memphis and Nashville are not the same. They're not even. They don't even play in the same neighborhood. If you go back and start doing the demographics of what happened in 08, 07, 09 in Memphis and what happened in Nashville, it is not even remotely close to the same thing. I think that Memphis has a tremendous amount of people that live off the system, and they just do not perform. I mean, they don't produce anything. They don't bring anything to the scenario. And then Nashville does not have near that amount of people. And then there are so many new businesses coming into Nashville. There's new businesses coming into Memphis too right now. So that can change as these new businesses come into Memphis. But it ain't going to change if the government don't say, I'm not giving you welfare money anymore. I'm not supplementing your income anymore. Go get a freaking job. And I think that's what we need across our whole entire country, is for the government to back off of feeding everybody and tell them to go get a job. Because half of these people, or 3/4 of these people that are getting government assistance, can go work. But they don't want to because they don't need to.
Right.
Because the government's willing to pay them. And in my opinion, I'm not sympathetic to that.
What, in your opinion, what are your odds of the government actually saying that, following through? Because I
Zero.
don't see that. Yeah.
Zero. I think that it is absolutely zero, because the government loves giving people money, because now the government controls those people.
Right.
And I have seen that numerous times with people that I knew, that the government started giving them assistance, their whole mentality on everything in life changed.
Switches.
I mean, it switched, and they were welfare government recipients, and they were protecting the government at that point in time to be able to get their paycheck for free. And it's a shame. And
It's not the America I grew up in.
No, it's not. It isn't at all, and it's disgusting. It's embarrassing. You know.
Yeah.
I mean, we live in a country now. You can go steal $1,000 from Lowe's, and they don't even arrest you. You know, they don't do anything.
Yeah, it's alarming.
And and then, you know, the problem with allowing them to do that at Lowe's is then they think they can go do that at your house. Then you get killed or they get killed, and when you kill them, you go to jail for killing somebody.
Right.
You know, and then, you know, your life's gone because the government started this garbage.
Yeah.
You know, we have a mostly peaceful protests as they're burning everything in a block down.
Yeah.
It's mostly peaceful.
Yeah.
No, it's not. but anyway.
So you just reminded me of something that I learned something a while ago about pillars of democratic society. You know, there's two basic ones that are referred to all the time. One is rule of law and property rights, right? And when you see either of those fail or start to fray, which my observation is I'm seeing that in states like California. You reference people running into the store, stealing $1,000. That's a breakdown of property rights and rule of law.
Yeah.
When you see, you know, unfortunate homeless people camping on your front yard.
Yeah, and you can't throw them off.
Exactly. In my home state of Washington, right? This is happening now. It was just California. Now it's Washington. Now it's Oregon. Now it's the East Coast. If those states determine the future of the states that are in between the two coasts, particularly the mid states like Tennessee, Ohio, Indiana, and so on, the heartland states, the best investment states in the country, arguably, right? What happens to our ability to maintain our wealth if we don't have rule of law and property rights?
You don't, because it's you know, it's more and more going to the criminals instead of to us. You know, we had an issue in our city not long ago where somebody came out of his house. The fire department was looking for a missing kid, and he came out of his house with a gun. And there's two different stories to it. One story is that the firemen said that he had an assault rifle, and then the second story is the guy said he had a pistol. But he did not brandish that gun. He did not pull it out. He did not threaten anybody with it. But what I found out afterwards is that had he have pulled that gun out, that he could have he would have went to jail for pulling the gun out. So now he lives way off of the road, and people trespassing on his land. Let's say they're coming there to rob him. He can't come out of his house with a gun and say, "Get off my property. I got a gun." But what if they're on his property to rob him? Now they can pull their gun out and kill him, but he can't pull his gun out and protect himself. You know, unless they did it first or whatever. And that is not what our country was built on. I mean, we have that right to protect our homes.
Right.
You know, and I got, you know, people attacking my family all the time. I mean, nonstop. And I'm gonna tell you right now, there's a lot of them that if they could kill me, they would kill me in a minute if they thought they could get away with it. And there's no question about that. And I can probably produce 50 people that would make the same statement. There's no question. If they could do it and get away with it, they would do it. But I'm not supposed to be able to protect myself. That's just not the way. That's not the way it was designed. You know, these people went by a piece of land that I was tearing a house down and took cinder blocks and threw it through the windows of my equipment. Did over $11,000 worth of damage to my equipment. And half of the people on Facebook posted that you deserve it because you put yourself out there so much. I put myself out there for what is right for our city. But that is the criminal mind of our whole society now. You know, we should be able to do anything we want to do, and that, you know, you should be protected in no way. I digress a little bit on that, but it's going the wrong way.
Well, and I don't think it's by mistake. I think it's by design. Just like we talked about people coming through the southern border, people migrating into Europe. These are policies that somebody is deciding at a maybe global level, because it's not just happening in one country. Right?
Well, most of the people coming into our country are grown men, military age. I mean, that's most of the people coming to our country. They're not coming over here with their families.
Yeah.
You know, it is a bad situation.
So when we talked about this earlier, I mentioned to you that I was looking into, you know, a standard defense to something like this is move X% of your assets out of the country to hedge against what may come. And there's also a saying, never bet against America, right? America is the empire right now. The question is, how long does the empire last? Where are we in that cycle? So when I looked into that, I only found less bad options as far as where to move assets to be safe in a stable government.
You said you went to the Nomad Capitalist, right?
Yeah, that was back in September in Kuala Lumpur.
Okay.
And what they were essentially suggesting, more than most countries, were the pigs. If you remember, Portugal, Italy, Greece, Spain. And these are countries, if you remember back in 2006, 7, 8, 9, 10, they're bankrupt.
Yeah.
They're even more bankrupt today. The debt they have has only grown. It's only been refinanced, right?
And nobody has a powerful army.
Right.
So they're no threat to anybody. So why? It's kind of like Costa Rica. Why would somebody attack Costa Rica? They don't have an army.
Right.
So what are you attacking them for?
So the risk with these countries, say you move 20% of your assets to Portugal as an expat. What rights do you have as an expat? What happens if this next cycle turn gets really bad? These countries are even more levered than they were before, even more desperate to collect cash and assets from their citizens or the generous expat who moved over there with 20% of his assets, right? So they're going
to seize your money.
Exactly.
It's like China. Robert Kiyosaki talks about whenever he found that gold mine in China.
Exactly.
And millions and millions and millions of dollars, because he was syndicating it, of other people's money invested in this. And at that particular point in time, and up to here recently, that is the largest gold mine ever found. And a year into it, China came in and said, all right, we're taking the gold mine away from you and get out the country. And that was it. It was over.
Yeah.
And great lesson learned. But that was 30 years ago. And now he just found a new gold mine.
Utah.
It's in Utah.
Yeah.
So that's supposedly going to be a lot better than the other gold mine. But now he's 78 years old. How much is he going to get to enjoy that?
Yeah.
Well,
I wonder, and I asked you this question too, but before I asked you that question, I was thinking, you didn't have that concern. You don't see diversifying your risk. You're 100% America.
I'm 100% America until I see something that would give me the reason that I need to get out.
What would that be?
Well, I'm paying attention, so I'm as you are. I think you said you was a big fan of George Gammon. So I don't follow a lot of George's principles, because George will tell you don't invest in real estate and stuff like that. I'm not listening to that. Same with Robert Kiyosaki, don't invest in real estate. But right now, they think that gold or Bitcoin and other things like that are a better investment. I don't follow that principle, but I listen to those guys because I think from a macro economic standpoint, George is pretty much dead on the money. He does a really good job. I think he mispredicts that the market's going to crash and it's going to crash here. Mark Moss is the same way. I love those guys. I mean, I'm friends with both of them, and but I'm not a doom and gloom guy. But when I see everything starting to collapse, then I'm going to figure out how to do that, if we were taking a huge hit. But the question is, when we take that huge hit, is not, because as bad as the American dollar is, it's still the best out there. So if it's still the best out there, when the American dollar takes the hit, isn't every other country going to take the same hit, and maybe times 10? Because when we drop 10%, a lot of them currencies may drop 30%.
Yeah.
Yes, no?
Well, I'm
not an expert at that.
Yeah, so this goes back to what function does gold and silver play? And we see the countries like China, Russia, Turkey.
Buying it.
Yeah. Anyway, there's a lot of the BRICS are starting to get onto that. Well, we have to have at least a partially backed currency. So we'll have 80% fiat, 20% maybe gold, and we'll sell it as it's a gold-backed currency when it's not. It's another con game that will erode and be debased like every other.
Yeah, once they get it, it'll be like the dollar. Once you get
first.
it, you got it. Now just do what you want to do. Nobody's going to stop you right now.
So to answer your question, the dollar starts collapsing. Some sort of financial crisis happens. The Fed can't bail out anymore because that's been legislated away. It's only a bail in. We talked about that. So that starts to create a cascade in the banking system. And then we talk about what kind of rates the Fed has to offer the treasuries to make it attractive. China doesn't want to buy anymore. They're saying, we'll buy gold. Thank you very much. We don't want your worth less debt.
Yeah.
Right? They see it coming.
Yeah, they buy it and then we devalue it. They buy it and we devalue it, and they just like,
what's the point?
We're just getting worse and worse.
Yeah. So a lot of the people that I listen to.
Now, what about this, though? How much of our farmland has China bought?
I don't know.
How much of our industries they have bought tremendous amounts of land in our country? Tremendous amounts.
For what purpose do you think?
I don't know.
Gates bought 250,000 acres in the U.S.?
Gates is the largest landowner in the world. Or in our country.
Yeah. Why?
Exactly. Why? There's something coming we don't know about, and all these guys are buying land. But China's buying up farmland. They're buying up all this crazy stuff, and they're not operating it as farmland anymore. So what are they buying it for? I don't know.
Yeah.
But I think because every country out there is investing in the United States and they're buying land in the United States and stuff, I think that says that the plan's going to be to stabilize us somehow. Maybe I'm wrong in that, I don't know, but it was just a year ago that they were buying hundreds of thousands of acres over in Texas and places like that, and prime farmland and stuff.
They what I've heard about that is they see America, and have seen for decades, as their plan B.
Yeah.
If they can get their money out, they buy in a stable government, right? Which is still relatively stable. It still sort of has rule of law. I guess it depends more on the state now.
Yeah,
red
it's the
state,
most stable
blue
out
state.
there at the moment.
Yeah. So anyway, yeah, I think we're headed for some interesting times. But I wonder. So you don't see.
So buckle up, Buckwheat. We in for a ride.
All right. Yeah. So, any concerns about a global war? There's a lot of talk. Robert talks about the certainties around Israel and Hamas getting into the next World War III, pulling everybody into it.
I do think we will have a World War III.
When?
I really don't think it's going to be very long.
Within our lifetime.
Yeah,
I think so too.
I mean, I wouldn't put it past the current administration to throw us into a World War III before the elections to stop the elections.
I've heard that theory.
Is that really way out there?
Well, there is some. I forget exactly the reference in the Constitution that allows the president, the sitting president at the time,
put it under martial law.
Yeah, we talked about this earlier, right? Yeah. To say we need to hold off on the election. We've got a bigger problem right now. Yeah. And that turns into full-on dictatorship or fascism. And so
it turns into all that, and that would be the avenue, because I got a friend of mine who is, I would call him, if you talk to him, you would say he is certified nuts, but he is a chemist.
What's a chemist?
He worked for the government 20 years ago. And when he worked for the government, he was they were making chemicals that you could put in the air that would kill the whole population of our country in 3 days.
Oh, right, the chemtrails.
Yeah.
Yeah.
It was that, but I don't know if it was through chemtrails. He worked for the government. And he said he worked alongside Russia. He said he worked alongside China. In different countries. He said everybody was in the same room working together. He said we are not enemies. He said they want us to think that we're all enemies. We are not enemies. And then he said that this was during the Clinton administration, and he said, and then they asked me to do a hedge fund for the Clinton for all these people that were friends with the Clintons. So because that's what he did, he was a biologist. He would go spend months on something new that was going through the FDA. And he would go to all of the meetings and he would pay attention to it. And he would let the investors know this is what's going to happen. They're going to pass this or they're not going to pass it. And they would invest billions of dollars into what this guy said. Mm-hmm. And they were making tons and tons of money. And he said life was good. He said, and then I realized that most of the people I know have now committed suicide by shooting themselves in the back of the head. He said, and I thought that it's time to get out. And he got out of it. And basically, he still lives a crazy life where he's no consistency in his life at all. He said, I don't ever stay in the same place very long. I don't ever do this. But, you know, there's a lot of people out there that say we really aren't enemies with everybody. We really, it's a great facade. And so what if you got to kill 100,000 people every now and then in a war to prove that we are enemies? You know, does it really matter in the scheme of things for big government? And it probably does not. You know, would China care about killing 100,000 people? No, they got billions. What they care? You know, it's not a big deal. It's just what it is.
Right.
And so I'm not trying to be a conspiracy theorist on that. That's somebody else's story. I'm just repeating it. But are we all enemies? Are we really some big thing that's being led behind the scenes? I mean, so we look at COVID. When in the history of the world has every country in our world come alongside each other basically and all followed the exact same plan? When has that ever happened? Never.
Right.
And I don't think it's possible for that to happen without it being orchestrated. Yeah. I just don't. I mean,
so who?
You look at most of America, you know, well, not most of America. You look at the red states in America. The red states didn't cower down to COVID and run. They went to work every day. They did what they needed to do. They didn't care.
Yeah.
You know, whatever it is, bring it on. We're going to deal with it. The blue states shut down completely. You know, took a year. Didn't let their people work. You know, destroyed the economy in their states. And you know, for what?
Right.
You know, and I think, you know, that is a powerful thing to look at to say, how in the world could that happen?
Yeah.
And it can't happen if it's not orchestrated. I don't think. I just don't think everybody would do it. I mean, we did not have enough deaths in our country to put a dent in our country to worry about it. I mean, I never worried about it. I mean, life is what life is for me. You know, we just going to live. I went to work every day, and that's just what it is. If I get sick, I get sick. I'll get over it, I'll die, one or the other. And it's not much, I ain't got much value in life as I probably ought to. It's just what it is.
Yeah.
But anyway, I digress.
That's all right. There's some people out there that are much closer to this conspiracy theory that you alluded to. They mention names like Klaus Schwab.
He's always on the top of the list, ain't he?
World Economic Forum, you know, all the people that gather at Davos. Some are world leaders, some are young leaders that are being groomed, I think the term would be, to be world leaders in the future. And, you know, they mention things like you'll own nothing and be happy. They want you to stop eating burgers and steaks and eat crickets, spiders, you know, that sort of thing. They warn.
And why is that? Why we live in the greatest country in the world. We have no issue producing food, none. But government put regulations on us to stop us from producing food. They'll put regulations on us to stop raising beef. You look at Switzerland, they're shutting cattle farmers down, and they're killing their cows because they fart too much.
Yeah.
And they're saying that they're destroying their world because the cows fart.
Right.
And I'm like, how stupid can you really be? Right. Really, how stupid can you be? You know, we're on a ship right now. This is a pretty big ship, right? So the pollution going out from this ship, taking us on this trip we're on our way to Cozumel right now. So the pollution this ship is going to produce just to get us to Cozumel, I guarantee you it's going to produce more pollution than all those cows in Switzerland for years and years and years. I mean, but they ain't shut down our vacations. They ain't shut down our pleasures in life.
Yeah. So the backstory on this from these people is there is a plan. The plan is to depopulate the planet because there are too many people consuming the resources. The resources are dwindling, and you know.
And when you're talking about resources, you're talking about
air, food, water,
energy. But food is easily producible. Energy is basically fairly easy to produce. Now we can't produce more oil. We can't, but we still have, you know, more than 100 years in the ground. So you think we can't come up with an alternative solution in the next 100 years that works? And I'm not going to say it's not air or water or coal. I'm not going to say that's not the solution, but they might be able to take what we can produce in air or with sunlight and multiply it times 1,000. What we can produce right now with one panel, they might be able to multiply that times 1,000 and produce something that much more in the next 100 years.
Right.
And then how much more can they do? I mean, it doesn't make any sense. You know, we got California who can't produce enough electricity to take care of their state now, and they're making everybody go to more and more electric cars. You know, when they're shedding your power in the middle of the summertime because they don't have a power grid that'll support enough to give you air conditioning.
Right. Yeah.
So why don't they invest some of those dollars in producing better products?
Agreed.
You know.
Yeah. There's a lot of upside to what might be coming, you know, through AI and other technology that's advancing very quickly, and it's in a large degree I think it's unpredictable, especially because we don't know how quickly this technology will develop and how it will develop. But my understanding is the thinking right now is too many people. Malthusian, you know, Dr. Malthusian, I forget his first name. You know, so the next go around, we're supposed to cull about 2 billion people from the planet. Part of that will be through a cyber pandemic, coupled with a real pandemic, and then a few other catastrophes that are in sequence of each other. So it won't just be like COVID, one and done sort of thing. It'll be a cascade of events that will hit. If you think you're done with the next pandemic, then something else hits before you're through.
Well, you look at the inner cities. They're going to kill themselves anyway.
Yeah.
They're going to go in it. If you look at what happened with COVID when the riots started, they're killing people. I mean, they're just killing each other.
Yeah.
So, I mean, as stupid as it sounds, they're going to go in there and just destroy everything in play, and there's nothing else they're going to be able to do.
And where's rule of law and property rights, right?
Yeah, there will be none.
That's right.
There was none at that particular point in time.
Yeah. So to that point, how do you plan on protecting your wealth, everything you've worked for and sacrificed your time, your life for, up to this point? If you see the pattern continue the next 3 years, 5 years.
So I'm not gonna. Here's what I'm not gonna live my life in fear of it. Okay. I'm gonna continue to grow, and I'm gonna continue to do what I do, and I'm gonna continue to make myself more stable. Okay. Where I can live on less than what I'm making. It doesn't take near as much to make things happen. You know, something like what we're talking about right there happens. Okay, I can't travel and go get money. I can't do this right here. So, you know, I got a lot of land. You know, I can farm. I can produce my own food. I can produce everything that I need right there on my own property that I own. So that's not an issue for me. I can take care of myself from that perspective. And then the next issue would be, how long would that last? You know, and you talk to a lot of people, they say something like that right there typically lasts 30 days to 90 days. And then when any world order where our countries have collapsed, it took them, you know, 30, 45 days to figure out the solution, get everything back in order. Do you agree with that or disagree with that?
I don't see that as the more likely probability, because in my mind that would assume that it's a kind of a rank and file kind of correction.
Yeah. Now, if we're going to nuclear war or something like that in our country, that's a whole different story.
Say we go to martial law. What happens to your holdings? Martial law, right? So the president says, we're not going to have an election. And by the way, anybody who has rental properties, anybody who has whatever, fill in the blank, these are the new rules, right? The rent has to be X, or you can't charge rent or something, you know, whatever happens, anything can happen. We've seen through COVID what happened, right? And
so if that happened, then my thought is all the W-2 workers also, everything's going down for them too. So they're not producing anymore.
Right.
Nobody's producing. So I would look at us at that point, all of us in the exact same position, you know, basically across the board. Everybody's in the same position. So I got to do what everybody else does. I got to produce my own food. I got to be able to take care of my own family. I got to be able to take care of what I got to take care of. And that would be first and foremost. And that's what we would do. I mean, I have a certain amount of food storage. We have plenty of guns, so I got enough to protect my land. My land is not an easily accessible piece of land where I live. It's very hard. And for somebody to stroll onto my land, it would be a very dangerous thing for them to do.
This is where you live?
Where I live right now.
Okay. Do you have a bug out location too, or?
I do not have a bug out location, but there's one way into my property, one way out of my property. And if you're going to come in a different way, you're going to go down 300 feet of cliff and come up the side 300 feet on the other side to get back to me. Mm-hmm. And it's not just something you're just going to walk up there. They're going to take an easier route. They would find something much easier to do.
Are you part of a community in this area, or is it just you with the AK?
So I got some family over there that are handy with all that stuff, and so we would bring a group of people together.
Okay.
Now I have enough food storage to do that, and I live on enough land, and we have a lot of wildlife, so we do that. I got a pond that's got fish in it.
Great.
We got different avenues to feed ourselves.
Okay.
And try and protect it. So, if it got that bad, then we're just going to do what we got to do to survive till we.
Yeah, at least get through the first culling and then regroup.
And then figure it out.
Have you heard of this homesteading movement? Homesteading with Joel Salatin and others like him.
Is that the groups of people coming together and building some stuff? I know. Yeah. So I was part of the collective for a couple of years,
right?
And they talked about that a lot. I'm not part of any group like that, but they talked about it a lot. And there's a lot of people where we live that are preppers, a lot. Mm. So there are people that are prepared.
One interesting thing that I've noted with people like Mike Maloney, Chris Martinson, we heard his name today, Lynette Zhang, I don't know if you're familiar with her.
I am. Well, Lynette came to a lot of our
collective
functions. She came to a lot of them. Chris did also.
Oh, okay.
So they both came to a lot of our functions and talked about it.
So all three of these people, and there's others out there, they're really big on having at least 8 or 10 dimensions of food, water, security, community, medical access, and all this stuff. They're putting real assets and efforts. Mike, for example, moved to top of a mountain in Puerto Rico. Chris has got his own bug out location.
Well, Lynette's bug out location is supposedly really hard to get to, and it's on the top of a hill, and you can hardly drive to it.
So these are multimillionaires that are saying, I see what's going on, and I'm taking action to protect myself from that and create communities to be able to take an impact from when that happens. They're not saying it, if it'll happen. They're more worried about when it will happen.
Even Mark Moss positioned himself with people. He bought a lot of land in Texas, positioned himself with people and military people that if something happens, he's got a compound that's going to bring people in, and they're gonna take care of business.
Okay.
And he's got his own farm already set. He's actually got a farm that they're producing off of right now. And there's a lot of people that have taken some huge measures in this.
Okay, very interesting. Can we switch gears for just a minute?
We can do anything you want.
All right. So thinking in the realm of maintaining your wealth, asset protection, and so on, can you describe a little bit about how you've developed your asset protection strategies? We're talking about LLCs or land trusts or.
So I have about 20 LLCs, different LLCs, 19 or 20. And I have a lot of LLCs that buckle through an LLC that I own in Vegas to give me anonymity so that people don't know what I own. I have a couple of Delaware LLCs that we do business out of. So my asset protection is through that. As far as running my businesses, everything is done through an LLC. I own one particular piece of property that's in my personal name, and that's the only thing I own in my personal name. Everything else is in something else's name.
Okay.
And a lot of people can guess some of the properties I own because I'm obviously a landlord, so they know some of the properties I rent. But there's a lot they don't find and they don't know about. So that just gives me anonymity. As far as how do I have my estate planning set up? So I got enough life insurance because obviously if I was to die, and
why do you have life insurance? I'm asking because if your net worth is this, why do you need life insurance?
So I have life insurance because, and I may not keep my life insurance forever, but for the foreseeable future I will, Because what I don't want to happen is I don't want to die and then my kids inherit what I have, and that tax bill right now would be at least $15 million.
They get up a step up in basis though on if it's real estate.
Well, they got I don't know. I use an attorney to do all that. I don't understand all that, and I haven't tried to understand all that just yet. Now, we were working on putting some stuff together so that I could move some properties into some different trusts, irrevocable trusts that would protect the properties against inheritance tax. But I have not done that yet. So there's a lot of planning that I still haven't done, and I will hold that life insurance until I've done enough planning to make sure that when I die, there is no estate tax that my kids have to worry about. I have bought so much property from fire sales where people die and there's a huge tax burden, and they only give you 90 days. You got 90 days to pay those taxes or they're going to take your land away from you, and they're going to sell it. So these people are selling the land at a fire sale, and you buy it, and they don't really care what their land brings. They just want money, whatever they can get. So and I don't want my kids to ever have that opportunity. So we do have our land set up in trusts. So the way it is, it's set up in different LLCs for each kid, and that way I don't have two kids inheriting the same thing. So I have two kids, my wife has two kids. So we have the LLC set up where each kid gets their own LLC. And then basically my attitude as far as that goes is I'm not giving the kids anything. So we're setting, each one of those is in a trust that lasts 360 years. So they're not going to be able to spend the money that I'm leaving them. And so what they will do is I'm going to drug test them 4 times a year. Whoever's managing my estate will drug test them, and they will get a quarterly draw on money. But they will not get any money for any month or any quarter that they fail that drug test. So they fail the drug test, there's no money for that quarter, and there's no going back. We will drug test you on the next quarter, and if you pass the drug test, you'll get your money for that quarter, but we don't go backwards and get you that.
That's interesting.
So we're not going to let the kids have any more money out of that trust than what they physically can make in a year.
Okay.
So if I got a kid that wants to work at McDonald's and they want to make $30,000 a year, okay, you can pull $30,000 a year out of that trust, and that's it. You can't pull any more.
Okay.
But let's say I got a kid that's working at McDonald's making $30,000. Okay, they can pull $30,000 out there. But let's say they got a little bit of enthusiasm about them, and they want to go in and they want to build and sell a house. Okay, my trust will give them the money to buy everything to build the house and sell the house. My trust will be the bank. But in the end, the trust makes 10% off of whatever you do. So you're going to pay back all the money when you sell that house, plus 10%. And then you get to keep everything left over, and that goes towards your income. Okay. And then the trust will actually match that also. And so I want my kids to produce. I don't want them to ever feel like they're trustafarians and they're living off of daddy's trust and living large. I don't go out and blow money on stupid stuff, and I don't expect them to either. I expect them to be responsible with it. But it gives them that incentive, I think, to go out there and be a producer. I want to do better. And if they work a regular job, that's fine. I don't care. But I don't want to give them money, to go buy a Lamborghini. That just doesn't make any sense to me.
Right.
And then I have it set up where it only goes to blood. So my kids go get married, that trust stays in the bloodline. So they have kids, their kids have an inheritance to that trust because it's in my bloodline, but their wife does not. Or for my daughter, her husband would not. As long as he's married to her, he does. But if that disappears, he doesn't. And I'm just trying to protect it where all of it lasts. I'm not working hard and sacrificing everything that I do every year and every day so that they can have an easy life. I don't want them to have an easy life. I want them to work.
Right.
I want them to produce. I want them to understand that life is not about comfort.
Yeah.
And that's what America thinks nowadays, is that life is about comfort. For me, it's got nothing to do with comfort. I'm as responsible as ever to go out there and produce. You know.
Okay.
And that might be off. I don't know. That's just where I am personally. I think everybody, you think up whatever that needs to look like for you, and make sure that you're taken care of.
Yeah. Something I've been looking into recently: revocable living trusts.
Revocable?
Yeah.
Okay.
So,
but you know, you can turn a revocable into irrevocable at the point of death.
Yep.
And that is what we were working on. We haven't got it all set up, but we were working on that right there to do some revocable trusts that automatically turns into irrevocable trusts the day I die.
Yeah. So the structure that I have a trustee LLC, a beneficiary LLC, and some other LLCs. So the trustee LLC manages the properties and other assets and so on, but the assets will transfer to through a beneficiary assignment form. It's a certificate. You just sign it, fill it out, 100% or 50% or whatever it is, the proration. That certificate you give to, in your case, your son or your daughter, I don't know what you have. You don't have to create a structure for that. You're just taking your beneficial interest as the manager of the LLC, for example, and transferring it to whomever you wish to transfer it to. So there's no deed retitling, there's no court process, there's no probate process. It's invisible, it's private, nobody knows about it except you and your family members. So that's the structure that I've been looking to put into place, along with the other documents that go with that, the healthcare directive, the financial power of attorney, and the will.
I think it's important to protect it. I got some friends that are basically giving everything that they got to charity when they die. I'm not doing that. I'm not that guy. I watch what charities do with money.
Yeah.
80% of what they get, they waste. And you're not wasting my money. I'm sorry. I didn't work my behind off for you to waste my money. It's not going to happen. So I just want to control it. I want to control it. And I want it to help my family for the next 300 years.
Okay.
You know, which, you know, right now, I mean, we have enough assets right now that it'll do that. And if I'm not going to quit.
500 years.
Yeah. Huh?
Did you say 500?
No, 360. That's the maximum. That's the maximum you can do is 360 years.
Nevada LLC structure?
No, that's not a Nevada LLC. That's through the. I don't really know how it goes actually.
I thought it was Nevada. I use Wyoming, but I heard about the 365 year trust.
I think you can do that in any state.
Yeah. Okay.
But it's just the paperwork on it. So if they're only pulling, you know, obviously it's going to continue to hold real estate. So I don't, you know, my portfolio grows fairly large every single year. So those kids will not be able to dip into the principal. There's no way in the world they will ever dip into the principal.
So who manages it from a trustee standpoint?
So right now, the way we have it set up, it'll be managed through a trust company.
Okay. A bank, a CPA?
It's a company. And I don't know the company's name, but it's a company that just does trust. That's what they do. They manage it. And then I don't want somebody managing my stuff with emotion. I don't care about your emotion. I want you to manage it because this is what he said we're going to do. This, and this, and that's what we do. And one of my kids come give you a sob story about why they can't perform and they need this right here. I don't want you to. I don't care.
Right.
It doesn't matter that you can't. You're not getting the money until you do. So figure it out.
It's a difficult one because I've heard the cost on that is roughly 1% of the assets. So say you have 10 million in assets, right? So 1%, $100,000 a year to file the tax returns and manage the portfolio, distribute the assets, do all that.
Yeah, it's not cheap. But I also don't want to turn it over to
a friend
to a friend who doesn't know how to manage it.
Or her family member.
And my desire is that I want somebody to be able to manage it that knows enough about real estate to recognize. I mean, one thing that's important to me as I look at my portfolio on a yearly basis, I want to know what my return on investment is all the time. Well, my investment is low compared to what my investment 10 years from now is, right? So 10 years from now, I'm looking at this property, I'm like, okay, what is my return on investment? Well, my return on investment is huge. Okay, so what's my return on equity? So if that property has doubled or tripled in value, and my return on investment is a huge return on investment, but my return on equity sucks, I need to sell that property, and I need to go buy 3 properties or 2 properties that yield me the same amount of money and start that process over again. So I don't want to be in love with a property where, I'm not being financially responsible because I'm leaving the asset in something that's making good return on investment. But if you had the $500,000 it was worth, you would never go buy that piece of property with that $500,000. You would take that and buy 2 properties.
Right.
And that is, I think a lot of investors miss that. They miss the fact that you need to run those return on equity numbers every year.
Right. Exactly.
And you really need to digest it down. And then if it doesn't work, you need to figure out, okay, this does not work. What do we need to do differently?
That's really good advice. Yeah.
And we're talking about the 10 townhomes that we're fixing to build. So the play on those 10 townhomes may very well be because I know I got some stuff right there now that is borderline return on investment to return on equity, whether I need to hold it or get rid of it. So I may need to get rid of a couple of properties that would pay for the entire build of these 10 townhomes. And now I got 2 properties I got rid of, and I got 10 units making, basically 3 times, 4 times more profit than what the other one was making.
Wow. That's a great problem to have.
And it really is. And there's just so much power in understanding how the numbers work.
Okay. So I guess as we get close to wrapping up, I have a couple of wrap-up type questions. Do you have any insightful books or YouTube channels, podcasts that you follow that you recommend to your friends and family?
So I'm a huge proponent, obviously, of any of Robert Kiyosaki's books. I think Robert Kiyosaki, has brought me to that next level, and I listen to his podcasts every week.
Me too.
But I'm not, but in the same sense, I don't get a ton of value out of his podcast because they don't carry what they used to carry for me.
Yeah.
But I still listen to him because there's a nugget in there from time to time, and I don't need to learn a bunch of stuff. I just need to learn one thing.
Yeah.
And if I can learn one thing, I'm good.
Right.
And but I listen to any podcast Jason Hartman produces. I listen to all of the podcasts Ken McElroy produces. I will sit at night and watch, something Mark Moss does. I typically, Mark doesn't, as far as I know, Mark doesn't have a podcast that he does.
I just see him being interviewed.
Yeah, he just does YouTube channels.
Yeah.
So that's what I do with his. George Gammon, I listen to a lot of his stuff. Sometimes he may produce four podcasts in a day.
Yeah.
And they may only be 15 minutes long.
Yeah.
On current events. But I like that because I got a 15-minute drive here and a 15-minute drive there, and I can listen to the whole thing in that 15 minutes.
Right.
So I do enjoy that, and I will listen to those. And I will listen to the radio guys. I'm a fan of Bigger Pockets. So I like Bigger Pockets. I think they do an extremely good job with their podcasts.
Okay.
And then I listen to Andrew Frisella, at least one of his things he does a week.
I'm not familiar.
He is an entrepreneur. He owns, I don't know, I would say he's close to a billionaire. If he's not, he's real close. And he's in his early 40s, mid 40s. And he started out with a supplement store, trying to do supplements.
Okay.
And he is just an in-your-face guy, and he don't pull no punches on nothing. And he uses the F word about 300 times in any show that he does. So a lot of people, I was so turned off whenever I was first brought to him. I said, I'm not listening to that. I mean, he curses the whole entire time. I don't want to listen to it. And then one time I was told, just listen to this one thing. Get past the cursing and just listen to it. And I listened to it and I fell in love with his stuff because there's so much meat. And he's more of a coach to get you on the page of your attitude. Let's get my attitude right about this. Quit making excuses of why you're failing. Quit making excuses about this. Nobody cares. Right. Do this. And it's a pretty cool, you would probably enjoy it. You might have to get past the cursing out the gate, but he really does a great job. Okay. And his name's Andrew Frisella.
Okay.
And I think his supplement, he owns Supplement 1. And started out, and he just talks about, in his first 10 years of business, he made like $35,000 in 10 years. That's what he made. And then in the next 5 years after that, he made, $5 million. And then from there, it just started on steroids from there. And, but he does a really good job. So those are the ones that I do. And I like, I'll sit and listen to different motivational stuff whenever I'm shaving and stuff like that. Just listen to people, because I think our attitude and our mindset's everything. We got to garbage in, garbage out. So I try to keep myself. I'm not a news guy for the most part. I get most of my news information from the podcast people I listen to that I respect and I trust, and I listen. I get most of my stuff from them, and then I like business books. I'm reading right now how to win friends and influence people, whatever name it is. And it's like my third time to read the book, but it's still a good book. Yeah. And I like, I've read Ken's books too, and they're great books for somebody trying to start out. I mean, it's a great book to learn how to do it. And there's a book out there called The Honeybee. It's kind of like Rich Dad, Poor Dad. Okay. Except it's different, and it's a really cool book. It's called The Honeybee. And but anything like that I can get my hands on, I'm looking, and I'm looking to read stuff. I don't really like I don't like to read negative stuff at all. If it's negative, I just want to stay away from it. And I want to know what's going on in our country, so I want to read stuff that's going on in our country. And but I don't know.
Okay, no, I think that's all really good advice. So I guess the last clincher question would be, what advice would you have for your followers as to how to navigate what's coming up this next 3 to 5 years, whether it's crises or opportunities, or how are you looking at the next few years, and how would you coach your kids on this?
So I told you we do real estate classes, and I got one coming up June the 21st, 22nd, 23rd.
Where is that?
It's in Nashville.
Okay.
Or Goodlettsville, Tennessee. And I cater that to beginners, because my goal is I want everybody to get one property, get something, and that's what I encourage people to come to the classes. I want you to do something, right? And now I'm letting anybody that bought last time the class, and I told them you can attend the second class for free. So you're gonna pay full price for the first class, but you can come to the second class for absolutely free. And then we're doing that again this time. Buy one class, come to the second one for free, because I think people need to do the same class more than one time, because there's so much that's lost in there. Right. And I don't want to be worried about money. Just come to the second class and do it. And through that, I want to see people buying properties. And the last class we went to, there was about 4 people that had been to the classes before that did buy property, but there's a lot that didn't. And I was part of Rich Dad Education for years, and they were bought out by Elite Legacy, and then it kind of started going downhill. But we would go to those classes every single month, and it would be in a different state. We spend $4,000 or $5,000 to attend the classes every single month. Right. And our purpose for being there was to help other investors become better investors. It wasn't for the classes. I mean, I made the Hall of Fame in 2016, and I continued to go to their stuff till 2020, and or 2019. Sometime in 2019 we quit. But my whole goal with all that is just I want people to be successful. I grew up hard. I didn't learn to read till I was till I was 30 years old. Really? I'm a guy that probably should be in prison right now or something like that, because there's nothing in my life that should have worked. I mean, everything should have been a failure in my life. I left home at 17. I've been on my own since I was 17. And, all I've ever done is work hard. And that's all I've ever understood, and it kept me out of trouble. And once I realized that I could make money, then I made that money. I think I was 24 when I started my first company. So from 17 when I started working full time to 24, I had accomplished so much in life that I moved from New Orleans to Westmoreland, Tennessee. Oh. And I was living in a trailer. The trailer, I lived there for 2 years with no running water because I couldn't afford to dig a well. The trailer had plywood over almost every window in that trailer because they were broken. Wow. The floors were so rotted out that you could go to almost any room and the dog could get under the trailer and look up through the floor, and he would set his head on the floor like this and look at you while you was watching TV. And that's where I was at 24, and I started my first company. And I had no money. I had a guy call me up, and I was doing accounting work. So I was managing an office, and the owner died. And we didn't have any money, already behind on everything we owned. And I stayed working there 2 more months after he died. Well, nobody understood the concept. It was a startup company. Nobody understood the concept. And I didn't get a paycheck for those 2 months. And I come home one day to repossess my wife's car. And, you know, she stopped me on the porch. She said, "This is not working. You got to figure something else." Yeah. So I went in. I think that was probably a Monday or a Tuesday. And I went in and told them, I said, "I'm going to quit on Friday. I got to go." And on Friday, they shut the company down, which should have happened when Mr. Bill passed away. And funny story is his daughter, 20 years later, came to work for me. And she worked for me for a year before I ever knew who she was. I never knew she was his daughter. And it's just funny. But shows how small the world really is. But you know, my goal when I started that company was if I could just do $100 a day. And the guy called me up. He was a service guy for Hardee's. Okay. And he said, "Hey, Winston," he said, and I had never met this guy face to face. I had only ever talked to him on the telephone. And I was doing accounting, so I was doing collections and different things like that, billing problems, things like that. That's what we talked about. So he called me up and he said, "Winston, I hear you left the office." I said, "Yeah." He said, "What you gonna do?" I said, "I don't know." He said, "Why don't you start a maintenance company?" I said, "I do accounting, man." I said, "I don't do maintenance." He said, "Can you just show up?" Now this is in March of 1992. "Can you just show up?" We're now in April of 2024.